What do you think will happen to Tesla in the short term given its current performance in the stock market? Experts have expressed their respective opinions about the leading EV company and its stocks. Some remain bullish while others become bears. Keep watching as you definitely would not want to miss this one. We think that gas-powered vehicles are going to be obsolete within the next 5 to 10 years, and the traditional auto industry has to figure out a way to migrate into electric vehicles, said Cathie Wood in a Yahoo Finance interview. In early December, Tesla unveiled its long-awaited Semi, an 18-wheel long-haul electric freight truck, 5 years after it was first announced. Musk also has signaled there are plans to build out a charging network for long-haul trucks. Musk did not specify how much the 18-wheeler costs. The Semi is capable of traveling an estimated 500 miles per charge, accelerating from 0 to 60 miles per hour in 20 seconds. Tesla expects to ramp up production over the next year and aims to deliver 50,000 units in 2024. The first Tesla semi-trucks are going to PepsiCo Pep in California. Pepsi placed its order for 100 EVs when the Semi was first announced in 2017. We are bullish on demand for the Semi as Tesla moves forward with ramping production of the truck to 50,000 units in 2024, seeing considerable appetite from large corporations seeking to reduce their carbon footprints, CFRA analyst Garrett Nelson said in a recent note to clients. Shipping out the first new Semis would mark a win in a year when Tesla stock is down sharply. But despite Tesla's stock setbacks in 2022, the company remains the king of the global EV market. According to Wood, the total cost of ownership of an electric vehicle is less expensive than that of a gas-powered vehicle. And soon, we think within 1 to 2 years, and maybe even sooner with subsidies, the actual sticker price of vehicles, electric and gas, we think electric vehicle prices will drop below gas-powered vehicle prices and continue to drop. Our latest thinking is that by the year 2026, the average electric vehicle will cost about $15,000. Would explain that the reason they believe that there is going to be quite a bit of commoditization is that they believe that autonomous vehicles will be taking off by that time. She added that by then, autonomous vehicles will be run in autonomous taxi networks, so fleets and design are less important as the main focus is to develop the ability of these cars to get people from point A to point B. Why does Cathie Wood believe that one can become a millionaire with Tesla stock? According to her, when you look at Tesla's revenue growth for the past 5 years, it is compounded at roughly 48% per year. She emphasized that it was even at a time when Tesla has been facing a lot of controversies. She further stated that their forecast, referring to herself and ARK Invest, for the next 10 years is in the 50 to 60% range. For its part, Tesla is doing its best to maintain the top spot in EV production, and it is quite evident that they are putting in much effort. During the pandemic, for one, when all other companies and manufacturers have been struggling with chip shortages and supply chain bottlenecks, Tesla pivoted between suppliers by rewriting its software just so the factories and plants won't stop running. In fact, Tesla has opened 2 new manufacturing facilities in Austin and Berlin. These new plants aim to increase production along with the Shanghai and Fremont factories. These developments can most possibly mean an increase in operating margins and scale to manufacture vehicles. The opening of Berlin and Austin allowed them to achieve higher gross margins. More than that, Tesla's innovative projects lined up proves how much they are working hard for success. Projects like the much-awaited Tesla Cybertruck and the humanoid robot Optimus, among others, prove why Tesla deserves to be at the top of the game. When asked about her thoughts on Tesla in 5 years, Wood said that compared to other auto manufacturers, Tesla definitely has an edge. She said that if one analyzes cars not by brand but by range and power combination instead, Tesla is the best pick among them all. Still, she said that most famous car brands like Volkswagen and BMW have done wonders in the last few years. It is just that Tesla is way ahead of them in terms of the range and power combination. Wood said that most other auto manufacturers are not going to be able to keep up with or reach Tesla's combination unless they want to lose money on their cars. Wood emphasized that that's very important from a performance point of view and a range point of view. When asked about her thoughts on large corporations competing with Tesla in electric vehicle production, Wood has this to say: "They are failing miserably." Wood said Tesla's competitors are failing on the battery technology front as they are not riding down the consumer electronics cost curve, which Tesla decided to run down. Wood explained that Tesla uses a lithium-ion pouch which is much more costly than Tesla's consumer electronics batteries. Thus, if companies decide to compete with Tesla, they'll have to sell every electric vehicle at a loss, and at the same time, they're losing their internal combustion engine business. Wood said that the reason why Tesla is so far ahead of its competitors is that those companies have just gotten started. She said that what they have delivered so far are cars that don't even meet the range or other metrics of Tesla's Model S. Branding is something different. These other auto manufacturers have brands and a lot of brand loyalty. But I think as consumers start to shift from gas-powered to electric and look at the specs of different cars, says Wood. She said that although they might be persuaded by brands only, they won't have as good an electric vehicle as Tesla will provide. Tesla stock still lands a Zacks Rank 3 hold, with its automotive domestic industry now in the top 27% of over 250 Zacks industries. While there could be better buying opportunities ahead, Tesla continues to trade at a far better valuation than it has in the past. Also, electric vehicles are still a relatively small part of the auto industry market, and the space still has massive potential to grow. Tesla stock still appears poised for growth, and earnings estimate revisions are up from last quarter. Patient investors could be rewarded for holding the stock, with the average Zacks price target suggesting a 66% upside from the current levels. For now, however, the overriding concern about the health of Tesla stock is focused on its production in China and Chinese demand for its vehicles. Tesla sold a record number of China-made vehicles in November, according to data released by the company. It sold 100,291 China-made electric vehicles in November. That's a 90% increase compared with last year and a 40% gain compared with the 71,704 Tesla vehicles sold in October. However, multiple reports have said Tesla plans to cut its production in China. On December 9th, Reuters reported that Tesla will suspend Model Y production at its Shanghai plant in the final week of December. Tesla has refuted those reports, saying the claims that it was cutting its Shanghai plant by up to 20% were untrue. The outlook for demand in China has become less clear, even with a late October price cut and other incentives. Tesla also exports a large number of China-made vehicles produced at its Shanghai factory. However, the amount of time Musk is spending focused on Twitter has been raising concerns among analysts. In addition to laying off more than half its staff, Musk is dismantling content moderation on the social media site, which has caused a growing number of consumers to turn sour on the Tesla brand, which has taken a bite out of Tesla stock. Morgan Stanley analyst Adam Jonas weighed in on the matter in a note to clients. He said Musk's spiteful comments have inflated a negative sentiment about Tesla and could drive some degree of damage to the electric vehicle maker's fundamentals. Our investor survey reinforces our views that Elon Musk's recent involvement with Twitter has contributed to negative sentiment momentum in Tesla shares and could drive some degree of adverse downside skew to Tesla's fundamentals, Jonas said in a note to clients. Still, he maintained his buy rating on Tesla stock. When asked about the reason for ARK's positive stance on Tesla, ARK Invest CFA Tasha Keeney, in a recent CNBC Squawk Box segment, said, "Electric vehicles are just single-digit percentage points of overall auto sales, so we have to remember that it's still an early market. But we do definitely see Tesla as one of the market leaders both in electric vehicles and in autonomy." Make sure to subscribe to this channel for more of this content.